Have you seen Nifty FMCG has fallen by more than 3% in last 1 year, and since September 2024 it has fallen by 18%. All the major FMCG giants are falling for a while now. For example, Hindustan Unilever or HUL has fallen by 6.81% in just 1 year. Nestlé also has fallen by 6.8% in just 1 year. But why are all these FMCG stocks falling for such a long time? Come, let's see. Welcome to StockScope. So why the FMCG sector of India is struggling so much? Come, let's see the reasons one by one. Number 1, the rising raw material cost. Well, this has been identified as the core problem. The factors contributing to this higher cost include global supply chain disruptions, inflation, and increased demand for commodity. Key raw materials like palm oil, wheat, maida, potato, cocoa, and tea have shown sharp price increase. Number 2, weak consumption and subdued demand. Well, why so? It is because of the GDP. The real GDP growth rate has decreased from 9.2% to 6.5% in just 1 year. And this has reduced the household savings and consumption expenditure. The urban consumption has been subdued in recent quarters, and this has attributed to mounting monthly household costs driven by high EMIs, rising food inflation, and muted wage growth. Number 3 is intense competition. Yes, lately the FMCG sector is facing challenges from new market entrants, innovative products, and evolving consumer expectations. Yes, large companies like HUL, Nestlé India, they are also facing stiff competition from smaller niche players. And on top of that, there's this current economic uncertainty, and that is our number 4. So, volatile economic environments characterized by fluctuating GDP growth rates, changing taxation policies, and unpredictable consumer spending patterns make it challenging for companies to accurately forecast demand, manage inventory, and plan long-term investments. What is the future growth prospects for this FMCG sector in India? I believe, despite current pressures, the overall outlook for the Indian FMCG market is optimistic for 2025. In fact, the sector has projected to reach $100 billion by 2025. Yes, that is huge. On top of this, the FMCG sector of India has demonstrated around 11% growth in the first quarter of 25. And I think the industry leaders expect rural demand to continue outperforming the urban demand in the near future. And last but not least, the union budget of 2025 had some tax relief. These are going to provide a direct boost to the FMCG industry, I think, with consumption expected to pick up in the upcoming quarters. Because of all these reasons, the companies are cautiously positive for a recovery in financial year 26. So yes, I would say there is nothing to freak out. Now let's come to the more important question. How this FMCG sector of India is going to grow now? Well, number 1, by market expansion. The expansion into semi-urban and rural areas is seen as the primary driver of growth. And it is not just rural markets. The tier 2 and tier 3 cities along with the rural areas are becoming major growth hub. Let's go to the next one. Product premiumization. Any idea what that is? Well, it means offering higher end products with superior quality and unique features. And last but not least, the sector needs digital transformation and technological adoption. Technological advancements in supply chains are crucial for optimizing supply chains, cutting costs, and improving inventory management. Also, AI adoption is considered a game changer by 41% of industry experts at this moment. Now let us take a look at the impact on FMCG giants. Let's start with Hindustan Unilever Limited. Well, HUL has been directly affected by the margin pressure, and the company has reported weaker fourth quarter results. This struggle was attributed to continued subdued urban demand and a sharp and persistent uptick in input costs, including commodities like palm oil. And it is not just HUL. Nestlé India has also been affected immensely. It has reported weaker fourth quarter results, and due to the persistent uptick in input costs, including the cost of coffee and the subdued urban demand, the share price of Nestlé is unable to go upwards. But yes, still I would say there is nothing much to worry about because these giant companies have their own plan. Nestlé India's espresso concentrate coffee is cited as an example of premiumization. They are in fact working on it right now, and it is expected that it will boost the margins by offering high quality gourmet products. So if you are already invested in FMCG sector, I would request you to have patience. FMCG is not some type of sector that will give you sharp growth daily. Here you will have to wait and watch, and this provides a certain sense of stability to your portfolio. So I would suggest that every investor should have at least 20% of their portfolio amount to FMCG sector. At least I keep 20% to 30% of my money in FMCG always. But yes, this is not any investment advice. Before you invest in any stock or mutual fund, you should talk to a financial advisor and do your own research. Never invest in stock market without a thorough research, because stock market is subject to risk. And guys, this is it for today. If you like the video, please subscribe my channel and hit the bell icon. In my next video, I will come to you with another topic regarding stock market. Till then, bye bye.